So good evening, everyone. So far we have talked about basic market structure. We've talked about advanced market structure, and we've talked about liquidity. We've talked about POI, liquidity such as buy side liquidity, sell side liquidity, dealing range liquidity, and also internal and external liquidity. So we'll talk about those. And someone was testing me that he couldn't set up his Fibonacci. If you want to set up your Fibonacci after you already had everything, some people like they didn't watch the video. If you want to set up, click on the Fibonacci, come to the chart, drop it like this, draw it first. You see this thing here in this middle, this thing, this is the setting. You will see a lot of things here. Untick all those one, leave only 0.5, 0 and 1, finish. That's all you need. So I've done that. That one is okay. So I was talking about what we've done so far. In the basic market structure, these are the things we expect. We expect market to give us this type of movement, break of structure, go down, break, back, create the swing continuously like that. That's what we know in the basic market structure. Basic market structure, we know that okay, from this our higher low to this higher high, another higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. And before we take trade from any of the higher low area, we need to have a break to the upside like this. After we have a break and we see where price is coming from, then we'll now mark from here this place, this place to this place as our swing. Then we'll use our Fibonacci to mark the 50% of the swing because we have a break here. And after you have a break, what do you expect? Market should reverse after giving you liquidity around this place. Market should market should reverse. In the basic market structure, there's nothing like we don't treat anything like liquidity. We you expect reversal to this region 50%, then you start buying. Understand? That's for the buy side. Also for the sell side, that's opposite of what I just said. You have something like this, price doing things like this, going back up, coming down to break, going back up, coming down to break, continuously like that. Then you apply the rules using your Fibonacci, then you know what you are doing. And for the advanced market structure now, I talked about the type 1 and the type 2 structure, whereby the type 1 you have ABC, type 2 you have ABC, but type 3 you just have A and C. But I told you should just focus on type 1 and type 2 because those are the only one you'll be good at when you are starting out. You only use type 3 when you are already good and you want to maybe improve more or you want to add more knowledge. Or if you have the ones that are working for you and you're already good at it, you don't need to add plenty. So it won't confuse you. So for the advanced market structure, I was talking about price taking out the sell side liquidity, going back up, breaking up, coming down around this place, giving us B, going back up, giving us a second break, then coming down to buy. Then I said this place is our A, this is our B, this is our B, C. And B is the place that will always be taken out. You understand? It will always be taken out before price continue. Now, if price has done something like this again, you already know that okay, price has created another structure. What do you expect? You expect price to come again, create another B for you around this place, come back again, take out this B, continue again, something like this, go up, come down, go. This type 1. Type 1, you understand? That's type 1. And type 1 for sell, something like this. You expect something like this. Price taking out the buy side liquidity, come down to break to the opposite direction, giving you pullback for liquidity, then going back up. What's all this? What's this? Who is Oyediran Abdul Samad? What's the problem? What's the problem? You expect price to come to take out this B, then continue to the downside. So that's for sell side. Um, Also, we discussed about type 2, which is like this. Type 2, you have something like this, price giving you something like this, come down to break. Then while price is going up, it will give you your B around this place, then go up to break above. Then you expect price to do what? To later do what? Come down, take out B. B is just like an enemy that must taken out. Then price will now buy. You understand? That's for the buy. Then for sell, you have a buy side liquidity. Then when price is going down, you have price give you B, come down, breakout, then go up, take out B, then you expect to dump. So that's for type 2. We talk about that. And after that, I show you example on the chart and now how you can spot them. Like for this one now, this chart you're seeing there, what I saw that made me want to buy was because I have a buy side liquidity here. Understand? I have buy side liquidity. This buy that happened there, this buy that happened there, I was supposed to take this buy. I was supposed to take this buy, but it was the it was in the midnight. I was supposed to take this buy. It was in the midnight, so I missed this buy. So what I saw was on 30-minute time frame. Okay, this is 30-minute time frame. I just marked this place. Was it 30 minutes or 15 minutes I used? For this first one, around this area, I saw this pullback. This pullback is a good pullback. Then price did what? Break below it. After that, it went above, breaking above. So I used this side as my sell side liquidity. Then this pullback serves as my B. Understand? It serves as my B. Then I mark this area as my entry. Then in the midnight, it was 1:30 a.m. I was sleeping already, and price came to it and played out. Then after that, I saw okay, I use this place as my sell side liquidity again because price will surely come and take out B. I use that as my sell side liquidity. Then after price break above it, I use this pullback and this as my B. But it was far, but I knew it would play out. That's why I just mark my zone from this failed order block here. This is a failed order block. I'm using 45-minute time frame. So it's 45-minute time frame I used to mark the zone. I used failed order block. So I was expecting price to tap it, but price did came close, just 5 pips away. Then it just went above, moving over how many pips? 290 pips without me. So this one played out this afternoon. So I missed two entry today. Missed two entry. And this BTC, I can't take it because it's late already. It's already running 40 pips, but I'm not interested because very soon the market will close. BTC doesn't have big spread, but I don't really fancy taking trade at night. By this time of the night, don't really fancy it. Assuming it's like synthetics, all these indices, I'll take it. It's already running almost 50 pips, but I'm not interested. So we also talked about liquidity. whereby I was saying liquidity is money, liquidity is your buy stop, your sell stop, your stop loss, your TP, your POI, your FVG, your order block, any way you want to put it, they are all liquidity. Immediately you click on buy, you are pumping liquidity. Immediately you click on sell, you are also pumping liquidity. Immediately you close your entry, liquidity. Trade it sell, liquidity. Anyone. And I talked about what did I talk about? I talked about the buy side liquidity, which have been using always in our class. This is your sell side liquidity. The buy side liquidity is for the when you are looking for sell, whereby price will do something like this. After it take out this high, you expect a reversal. Understand? So buy side and sell side liquidity, they are used for reversals. Understand? And I talked about dealing range, whereby you have something like this. Saying something like this. You have price going above, then when price is coming back like this to give you a pullback, I use Fibonacci to explain that. The dealing range, this is your high, this is your low. Your dealing range is within this place, understand? But you are interested in where in the area which is below this place, understand? So I explained that also. If you watch the video, you understand it. So I also talked about the internal and external liquidity, which is just the liquidity outside the dealing range is the external, and the internal um is the entry, like the your institutional reference point in the dealing range. They are the internal liquidity. Understand? Like your FVG, your order block, your field order block, anyone you use, they are the internal liquidity because they are within the dealing range. Understand? So I also talked about which one did I talk about again? I don't think there's any other one except the POI, which is the point of interest. Point of interest, they are the institutional reference points that you are interested in after you have done your analysis. Those are the places where the big boys in the market they put their buy stop and sell stop. You should also be interested in that. That's where you take your trade from. So that's where you call institutional reference point, whereby I was explaining to you order block and field order block and FVG. That was yesterday class. To the people that were not in the class, you can watch the video again. So today, um, I will just maybe look for chart example. Okay, there was one analysis I did on deriv. I just wanted because forex pairs have been misbehaving lately, so I just um open my deriv chart today. This is volatility 10s. This is 1 hour time frame, but I check my 24 hours time frame before I started this analysis. What I saw was that I saw this sweep. I knew that price has been bullish, price has been buying for long, price has been buying from here. The market is still bullish, but I don't know where the price is going to. So I saw this buy side liquidity, then I saw this reversal. I knew that price has played out around this place, but if you look closely again, I have another block here, just a tiny one where price has touched the zone around this place. So I just mark that out. I just say, okay, let me drop down to because this was a day for day candle closing bullish, and that's the candle that went into the POI. Then the next day candle was closing bearish. So now, today now, I want to see how this candle will close. If this candle will close bearish, that means, okay, price want to sell. So that's what I just saw. And then I dropped down to 4 hours time frame to see what's happening around that place. So dropping down to 4 hours time frame, I saw that, okay, I was seeing a lot of reconstruction to the upside, reconstruction to the upside. So I knew that, okay, even though the price want to continue the buy, it will like probably sell for a while, maybe to the zones around this place. So when I dropped down to 1 hour time frame, I saw a lot of structures around this place. Saw a lot of structures. So I'll drop down to 1 hour time frame now so I can show you what I saw. So on the 1 hour time frame, I was looking for where to sell from to get to my buy area. So when the market tapped into that zone on that 24 hours time frame, it gave me this structure here, which is I have a buy side liquidity taken out, then price side selling after taking it out. Then after that, I have a break of structure downside, which is clearly showing me that, okay, market is trying to change character, so I should be alarmed if um market is trying to change character. What should I be looking for? I should wait for market to do what? Give me what? Liquidity. Then after this break of structure downside, price reverse back to give me B as my liquidity. Then I mark it down. Then what will I be interested in? I'll be interested in the zone that is closer to my liquidity. So looking at this old chart now, what can you see in this part? I have this failed order block here. So I mark it out. If I use my Fibonacci to mark from this place to where this price start reversing, this is my C, this is my A, this is my B. If I use my Fibonacci, you can see that the zone I mark is above, is in the premium area. If you want to sell, you should be looking at the premium area. If you want to buy, you should be looking at discount area. So the zone is in the premium area. So this place, I first mark this place. That's why I mark it with lines. You can see these two green lines that are marked. I mark them down, but I'm also interested in this zone up here. I have a failed order block, which is corresponding with my fair value gap here. I have a fair value gap here. I have failed order block here, and they are all aligning at the same place. But to not miss the trade, you only take trade that are closer to your liquidity. This is my liquidity, this B. Immediately price take out this B now. It may just start selling from here and may never come back to this place for a while. It might start selling from here, crash up to this place before it gives any reversal, maybe around to this place, then crash again. Then you are waiting for here. It may not come back to this place again. Maybe it's like maybe maybe it's like 2 weeks or 3 weeks time. It may not come back to this place. That's why I mark this place, because this place also is a good zone and is the closest to liquidity. You only take trade that are closer to your liquidity. That's why I mark it down. So looking at this, from what I taught you, this buy side liquidity taken out, this is your A, this is your B, this is your C. You see, and POI that I taught you, this is the POI that I was interested in. That's why I mark it out. When we come back to this place, when you are trading, if you are buying or you are selling, you will need where you put your TP. Understand? If not, price will reverse back to your entry and you will lose all the money you have already seen on the chart already without closing. Understand? You will know where you take your profit. That's TP. Now, if I'm to sell this, maybe after price gives me confirmation and I start selling from here, maybe after price gives me confirmation, the first place I'll be interested in taking profit should be here, this place. No, this is not the first place. This is the second place. The first place should be here. this draw on liquidity, the place where my what's it called? The end of this, what's it called? The swing. After the swing, the whole reversal, all this thing before price gets into my zone. This is where I'll be interested in taking TP, the first TP. Then the second TP would be where I know market will reverse from, which is this one. Now, looking at this place, now you can see a good structure. Looking at this place, this is where price broke out of structure. You understand? This is the main. Who is writing? Who is this now? What is this? Who is a FOSA? Stop distracting us, please, now. So looking at this whole thing now, price was coming, coming. Then it started giving reversal. This is a good reversal. This is a good pullback. Then after this whole reversal, this is where price broke out of structure. You understand? This is where price broke out of structure. But if you use your Fibonacci also to mark all this place to where this whole place, you know that this zone, they are the discount zone where you can buy from around this place. They are the discount zone. Understand? From here, this green place, they are the discount zone. But in the discount zone, where exactly you want to buy from? Will you start buying from here because this place is discount zone? No, you cannot buy from there. Will you start buying from here because it's discount zone? No, you cannot buy from there. You look for a specific place where you see your structure, then you mark them out, then wait for price to come there, then you take your trade. Now, looking at this now, I knew that all these places, they are all in the discount zone. Looking at this, I have a good pullback. You can see this pullback, 1, 2, 3, they follow each other. It is a good pullback. Then price reverse taking it out. So I can say this place is sell side liquidity. I can call this place sell side liquidity. Then price went above, breaking above it. After this break of structure here, within the zone where I'm interested in, after this break of structure here, after this break here, price pull back. We pull back here, then continue. Understand? We continue. After this continuation, then price reverse back to this FVG. This FVG have mitigated. Then price went above, came back again, tap into this place. But along the line, we still have another zone here, this FVG, that has not been mitigated yet. So this FVG is still a valid place to take trade from. That's why I still mark this place. But if you look at this whole stuff here, the most current one is this place. And this is the most valid one. You understand? Because this one now, price has not mitigated this failed order block. Price has not mitigated this zone. It's very clean. You understand? This zone here that I marked. Now look at this. We have resistance, then we have support here. Then we have a good pullback. I told you that is either you have 2 candles, one will be long and one will be short, or you have 3 candles for pullback. We have 1, 2. It's a good pullback. Then price reverse, broke below it, giving us a sell side liquidity. Then when price was going up, it gave a pullback, gave us B here. Then continue to break these two resistance. After breaking these 2 resistance, then price reverse again to form double bottom liquidity. Now this B has a companion, making it to double bottom liquidity, and price will come down to take out the double bottom liquidity. Then what are we interested in? We have already marked our B, we have already marked our A, we have marked B, we have marked C. What do we need now? We need POI, and our POI is this one, which is this failed order block. Failed order block. This is a failed order block here. So if price is coming, that's why I mark this failed. I told you that if you are marking your order block or failed order block, if the wick of the candle that the price engulf is longer than the body, you only mark the body. If the body of the candle is longer than the wick, you mark all the body and the candle and the wick. I explained that yesterday. Understand? So that's why I mark only the body of this candle, and you see that it has not mitigated or yet um by the B, so it's valid. You understand? That's why I left this here. Now I also have this. Any one of them that played out first is where I'll put more of my focus on. Now, if this sell played out very well and it started selling, that means this buy can still give reversal. But if this price reverse tonight and tap into this buy, that means this sell is no more valid anymore. This buy will go and break everything around this place. But if this sell trigger and gives confirmation and starts selling, that means this buy can still give maybe reversal to around this place, maybe giving reversal for maybe break of structure to the downside. Then you use support become resistance to take the trade. SBR, you use that to take trade after price tap into this zone and start selling. You just continue using support, SBR along the line, SBR to take the trade till you get to a specific zone that is strong. So along the line again, I still mark another zone. In the market, you have, like, mostly in derivative pairs, on derivative pairs, in synthetics, you have multiple zones. You have multiple zones. You just have to know what you are doing. You have to know what you are doing when marking them out. Then you see results. If you look at this structure here too, you can see this is a good pullback. Price gave a good pullback here. You have a buy side, sell side liquidity taking out. You have price giving you pullback here, and you have your zone here, which is other block. This is another zone. Depend on the one price gives you confirmation that you take. It's not that because you see a lot of zone, you take everything. You cannot just uh, um, put pending order buy limit that you want take trade here. You take losses? You surely wait to follow your confirmation before you take your trade. Like this now, you can see this is a break of structure to the upside here. You have like during the process while market was buying, give this break of structure to the upside. Then price did what? Pull back, tap this other block, give another break of structure to the upside. This break of structure is valid. Then if you are, well, I was telling that pullback you have at least 3 candles. You have these candles. It's a good pullback. That's why price reverse again, tap into a good zone. This was after this pullback, this whole pullback, price did what? Pull back here, give you liquidity. That's why this place was still valid. If not, price would have reversed. Assuming price did not give good pullback to give us liquidity, it will not work out very well. Understand? So price give pullback here, then reverse back, tap this zone here, then start buying. Now along the line, we have another break of structure to the upside here. But before price break the structure to the upside here, what happened? It gave us sell side liquidity, gave us our A, gave us B, and C above it. Understand? So anywhere you can put your C. So you can see that this place is still valid too. Looking at this place also, this is a good break of structure here. I've shown a lot of example. This one is type 2. This one is type 1. Looking at this now, you have sell side liquidity, break of structure, then price did what? Reverse, give you liquidity. Then you have your POI here. Understand? I mark FVG and other block together. So you have your POI. So that's it. You have, for this place to be even more valid, you have resistance, support, which is still good. If you know SRR or you know RSS, you can still trade them. Very good. So that's just it. It's not something that is hard. Just that you just need to spot it. You can see that I've spotted a lot of things here. Spotted a lot of things. This one is type 1. This one is type 2. This one is type 1. This one is type 2. This one is type 1. And see a lot of structure. If I go to, this was the one I was like trying to check today. So if I go to, let me press escape. Am I still in the meeting? Okay. Why was the A far from the liquidity? Which one is A far from liquidity? A far from liquidity as well. This one is not far from liquidity. Even though it's far, it doesn't mean, as long as price gives you pullback for inducement, doesn't mean. It doesn't mean. Price will just give you pullback. That's just it. This is V10. Let me go to V10. Maybe I can see something. Okay, on volatility 10. Let me see the 24 hours time frame. Let me make this chart bolder. Let me see what I have on 24 hours time frame. Okay, on 24 hours time frame, the price has been bullish also. Price has been bullish. Maybe on the review, you will not be able to backtest for long. That's one thing about them. Their charts, you'll not be able to backtest for long. On the 4 hour time frame now, on this pair now, you can see where price started buying from. After this price was actually doing something like this before. It was selling aggressively. This is a good pullback. Came down to break it. Then price gave pullback. Came down again. I told you either one long candle and one short body, or three candle closing above each other. Then we have a break to the downside. Then price gave another pullback, reversal, pullback, see, good pullback. Then we have reversal. We have a break of stretch downside. Then price gave a good pullback. Then instead of price to come down to break below, price did what? It gave was 1, 2, 3 good pullback for showing us that price is about to buy. Gave us this. Then price did what? Change character along this line. Price did what? Change character along this line. This is where price changed from selling to buying. Around this place, price change from selling to buying. This can only be more, can make more sense on higher time frame like 2 hour, 24 hours, 4 hours, 1 hour. But on 5 minutes, if you see price giving you, price has been selling, is not giving you pullback like this, don't go and enter anyhow. You take losses. Take losses. Understand? So this is where price change character. Looking, I'm seeing something here. I have a buy side liquidity taken out here. This is 24 hours time frame anyway. I have buy side liquidity taken out here. Then I can call this place my B. And what did I say? You take trade closer to your B. If I want to mark any zone now, I can mark from this FVG. Can mark this FVG. Then my zone will be from here. This 24 hours time frame is too big to take trade on this 24 hours time frame anyway. But if price gets into this zone, I'll wait on like 1 hour time frame before I take my trade to see what's happening. Or if this zone didn't give you confirmation, you mark this other block here. You have another block here still, which can still be valid. Understand? But for now, you are not looking for sell yet. You are looking for buy that will take you into the zone. And you know that price has been bullish from this place, which is from the place that price change character. This place that price change character. So looking at this now, I'll drop down to a 4 hours time frame. Let me see what's on 4 hours time frame. Okay, you can see this way price change character. What will you be looking for? Break of structure to the upside and pull back. But this pair, I don't know, it's one crazy pair. You may not see pullback. That's one thing about this pair. Before you see pullback, it's very hard. It's very hard to see pullback most of the time. Very hard. When I still used to trade them, it's very hard to see pullback. If it's going one place, it's going already. It may not come back. So looking at this whole chart now, I'm not seeing any good structure. The whole structure I'm seeing here, this one I'm seeing here has been mitigated. It has mitigated. If FVG has mitigated. So I may drop down to the 1 hour time frame if I can see something. But if I can't see anything, I will not force it. I will let it go. I'll look for another chart. I know that all I know is that the pair is bullish. Understand? It's bullish, but I cannot just take trade anyhow if I'm not seeing the structure I trade. I would rather go to another pair to analyze. Understand? So I don't rush it. So I'm not seeing anything here, even though I dropped down to like 30-minute time frame. Let me check 30-minute time frame. I'm not seeing any good thing here. So I'll just leave it. I'll go to another pair. Understand? That's how you do it. That's how you do it. You don't force to see it. If you are not seeing it, you are not seeing it. You cannot force it that it must come out. You cannot force it to come out. This is volatility 25 years, V25 years. So this one, on this 1 hour time frame, like it has been selling for long. I just opened this chart today. It's been long. I use this. So this one has been trying to sell. It has been trying to sell. And it's also trying to buy. It was buying before. It was buying aggressively. But I don't know why. Maybe all this is just trying to create pullback. But it may not be valid. Because what did I say? I know some people might have marked this order block. Sorry. Some people might have marked this order block. They'll say they want to buy from there because of what they saw this 24 hours time frame. They saw this buy side liquidity. They'll call this one their B. If you look at this whole thing now, the B may not be valid. You can see the B is not valid. That's why this order block price did not respect this order block. What did I always tell you? If you are marking your liquidity, what did I always tell you? That the pullback should tap at least, it should go into this 50% or at least tap it. If you look at this now, did it tap it? It did not even tap it. If you look at it very well, it did not tap it. That's why this order block did not play out. I told you that most of the time that it will play out is just luck. Like 80% or 85% of time, it will not play out. You can see this now. That's why this one, you see that if you look at it, it took out all this whole structure. If you look at it, it took it out and it's still selling. If today candle close bearish like this thing will dump. Then what should you be looking for? You should know that market has changed from buying to selling. Then what will you be looking for? You'll be looking for sell. Are you with me? Are you understanding what I'm doing? I've explained a lot of things, but many of you may not get it. That's it. I've explained a lot of things that they are key things that you need to know. All this liquidity, all this pullback that I'm always saying, you should note it. If price eventually break below this place, tomorrow, between today, tomorrow and next tomorrow. This is daily time frame. Then price will do something like this. If price do something like this, it will come to it may do something like this. It will do something like this. Come down to like this fair value gap that is within this place, or that failed order block. I'm coming. There's a fair value gap here within this place, and there's a failed order block here. Price will come here, tap it, then do what? It will now reverse back into this zone that you marked before, this other block that you marked before. That other block will now turn to this is where the concept of SBR is. I don't want to be teaching plenty things. I just want you to know the simple one. If I start teaching plenty things now, you just be confused. I don't want to confuse you. Just learn the basic one that will help you to be profitable. If I start teaching plenty things now, you will get confused. This is where the concept of this one come out. What do you expect later? Price to do what? Come back to this place. Give you something like this. Then price will tank to crash. So this is just it. It's not hard. It's not hard. It's simple. The thing is just that just know about liquidity. That liquidity I explained. Go and watch that video again. Watch the video over and over. And how I've been talking about liquidity. Anytime I talk about liquidity in those videos, listen to those videos very well. You understand what I'm saying, and you make profit. And also, if you mark from here to this whole place, no, for SBR, this is where you need to mark from the current area. Mark from here to this whole place. You can see that is within the 50% area. So that's it. It's as simple as that. It's as simple as that. It's not that hard. So this is what I'm seeing for volatility 25S. This is what may happen. This is what may happen. Something like this may happen. It will crash from here to crash this 24 hours time frame. And it has been selling already. It has been selling already, like for days now. You can see 1, 2, 3 these candles. This is just a pullback. Continue again, selling. It has been selling, but you are waiting for this support to be taken out very well. If the price take it out now, you know you have missed all this sale from this place. But where will you continue to be with them? The people that are already selling is this place. That's the only opportunity you have to sell. You cannot start buying. If you buy, you take losses. If you go to 4 hours time frame now, you see that the market has been selling too aggressively. You can see it has been selling for long. All this pullback is just valid pullback, just pullback for continuation. This one is doing just pullback for continuation to break this low. Understand? If price doesn't reverse to break this low, then it's trying to use inducement to trade. But I don't think this one is inducement type of trading. I don't think this one will happen that way. So this is what I'm saying. What I'm seeing is on 24 hours time frame. The structure I'm seeing is on 24 hours time frame. So if you look at 1 hour time frame, also it has been selling. It has been selling. So the class has been on for a while now, and I've already made recap on all we have done the from the day one to now. So what is left for you is tomorrow we'll do the top down analysis. The top down analysis. We just attend tomorrow because top down analysis is what will help you mostly. Because most people they will just open their chart, they don't even know where the market is going to. They don't know where market is coming from. They'll just open chart and see structure and just mark the structure and say, okay, this is what I want to trade. Markets will come to that place and take you out. It's not the time that you see structure that you enter. Sometimes you want to know where market is coming from, where market is going to. And that's where top-down analysis come in. So that top-down analysis is crucial. Some people they will say they will open their chart, they will go to 1 hour time frame and start analyzing. You are doing yourself, you just take losses. It may play out for you sometime, but most of the time it may not play out. So we'll do top-down analysis tomorrow. I will explain more and also how you can mark your zone and take entry. I'll show you everything tomorrow. Make sure you attend tomorrow. Don't miss it. And I'll stop recording. If you have any question, you can ask me.